Welcome traders to another Tick Mill trading update with me, Patrick Munley. Want to update the S&P 500 view using the E-mini futures contract and put together a plan for the trading week ahead and look at some high probability action areas and some price objectives for this week. So starting out in the higher timeframes, before we do that, let's obviously check in and think about where we are from a macro perspective. Big news really at this stage, or one of the key market dynamics, is the discussions regarding a Russia-Ukrainian peace deal and the implications for the European Union with respect to defense spending has been a major development over the weekend. Obviously, we had the Munich Security Conference. Vice President J.D. Vance making a couple of appearances there and really sounding the alarm to Europe with respect to their imminent requirement to allocate much more funding to defence, and as such, that obviously reads directly into the European debt market. A big problem for Europe has always been the lack of or the inability to raise single debt in the European Union. And so that is something that is being closely looked at now. So we'll see how that develops. In terms of the macro slate for the week, stateside it's very quiet. We get FOMC minutes on Wednesday, and then flash PMIs heading into the back end of the week. Obviously, we are all on high alert for the next Trump intervention on Twitter or Truth Social. So that's something to keep an eye on. But it's a relatively quiet week in terms of macroeconomic data. So moving to the charts before we do, just want to check in with the seasonal pattern that we've been tracking. So on this 25-year look back, and what we want to do here is update that with post-election years. And so the post-election year scenario is that we should have seen some type of trading or local high in place into last week. We have actually traded up towards the 6150 and just shy of all-time highs. So we need to keep an eye on this seasonal pattern with respect to its validity, given the current market trajectory. But still looking for some weakness in the coming weeks. Certainly heading into the early to middle part of March, where we're looking for a potential annual trading low. If we actually remove the post-election years from the study, we can actually see. Let me just go back here. We can actually see that the S&P would normally see a trading high into the 15th, 16th of February. So pretty much the weekend. And let's just update this with a 25-year look back. Yeah, so this weekend would without if you remove the post-election years from the analysis, suggests that we could see a trading high into the middle part of this month. Quite a few of the updates I've provided from Goldman Sachs also suggest that the middle part of February into the options expiration could also be a trading high heading into that March low. So just some few factors there to keep in mind. But if we move to the technical picture, and starting with the higher timeframes, the weekly time frame, we are now looking at a 5-period look back on the volume weighted average price that gives us something in the 60-30s. So we need to see a close back below there to see a momentum shift to the downside. Obviously trading meaningfully above there at the moment. And looking at our 62.31, which is our weekly 5=1 objective on the top side. Moving to the daily time frame and updating the expectations for range this week with respect to implied volatility. 62.04 is our upside objective and 60.60 is our downside objective. Remember that 60.60 level has been in play throughout the early part of this year. So that will be a key support area to keep an eye on, unless we start to see closes below there on the daily time frame. Then, to my mind, the momentum remains to the upside. Do note that we have significant momentum divergence in play, so it's this is a precarious part for the market to attempt to trade through, given these dynamics that we have in place. So initially, for me, any move up into that 62.04, I would be looking at opportunities to play it from the short side there, looking then for a pullback into our 6100 area, which is now the high volume or the volume point of control on the daily time frame. So we'd expect to find support there, and 6250 is the first stop on the upside. Let's move to the intraday timeframes, or the hourly and 4 hourly time frame, and look at where we can find our opportunities this week. So we're basically carving out an ascending triangle pattern on the 4 hour time frame here. So like I say, any pullbacks into that 60, 60, 60, 50 area, I'm going to use that as the bull bear zone for the week. And if we can get back into there, find bullish reversal patterns, we want to engage on the long side, and we are targeting 62.50. And like I said before, unless we start to see closes on the daily time frame below 62, 50, 62.60, then the bulls have the ball, and we are focused firmly on the upside. If we do start to see closes below that 62.30 level from last week, then we can start to think about a move back down into the 59.76 area, which is the value area low on the 4 hour profile, and that would be the first downside objective. And obviously, we will be then trading below the weekly projected range support, which then could add further fuel to the fire on the downside. But for now, like I say, focus on the upside, and 62.60, 62.50 is the key support area. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.